Hello, 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 hello. How's everybody doing? This is 50 Pips, rocking and rolling, 23rd of November, 2014. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, hope everybody's had an awesome weekend. Let's get ready to go for this week. Now, keep in mind that we're going to be going into Thanksgiving's weeks, right? So basically what it means is that you'll tend to see, especially in terms of US markets, less liquidity. Traditionally, the week tends to be bullish. I think most people like to be positioned long going into the week, and it tend to sell off into the peak on Friday. So we'll have to wait and see. But keep in mind that you may see some funky moves. You don't want it's not a kind of week when you want to be aggressively fighting flows. In terms of the data front, it's going to be relatively interesting because especially we start on Monday with the IFO out of Germany, so that'll be definitely interesting to keep in mind. It's a bank holiday in Japan, so we'll have to see how that impacts the market. Then on Tuesday, we've got the BOJ on the wires. We got some stuff out of UK, retail sales out of Canada, and the preliminary GDP out of the US. Uh, what else have we got interesting? We still got those estimates for the GDP out of the UK on Wednesday with core durable goods out of the US. We got new home sales, some trade balance data out of New Zealand, and Thursday we do have some stuff. The CPIs out of Germany, some Australian data. That's when we got the bank holiday for Thanksgiving in the US, and then Friday's pretty much going to be a bit of a dead day. We do have some New Zealand data. We have the European CPIs and CAD GDP, but always keep in mind that context of muted flows. Markets are closed. U.S. markets are closed on the 27th, and it's a shortened trading days on the 28th. Okay, so where does that leave us going into the week? Well, let's look at the equity side first. So in terms of the ES, we keep on getting this press higher, grind higher. We said unless there's something fundamentally going to change in terms of rates from the U.S., it probably is going to be grind higher, grind higher, grind higher. And generally speaking, it's all about the central banks and it's all about rates, right? And then of course China comes out on the wires, unexpected rate decision, bam, and we get that press higher break through those. Those old highs, and then we get a lovely little reversal candle into the open into New York. After we've taken out all the stops, this aggressive push, then you get some really late players here trying to buy that high, and then we get a beautiful real little retracement. Very nice action on Friday on the ES, very, very pure. And then market gets a bid exactly where you'd expect it to catch a bid, right? Previous resistance acting as support. So this is pretty much the level to watch going into the week. Bam, that breakout, that aggressive breakout zone. So the focus is going to be, can we go back up and take those highs again? And if we break above, those 2075 psychological level are going to be calling, and are we going to hold this break zone here? So that's really the big level to watch, and likely we'll see pivotal action here. As long as these lows hold, we'd expect the market to try and take stabs higher. If that breaks and we start getting daily closes below, then you'd expect the market to try and come back down and test that 2050 level. So for me, these are really the points, the interesting places to do action. I expect a lot of choppiness around in the week, so I much prefer to wait to engage at extremes rather than engaging anywhere inside this mid-range, right? Speaking in terms of extremes, we had that beautiful move on DAX when we said, we came back down on the weekly, bam, took out a bunch of stops, held at those lows, right, nice little confluence here. We got the close back above that 100 moving average on the weekly. We said here this is a very high chance we're gonna if we fail, we're gonna have to fail from higher levels, and this kind of move, especially when you start to see the next weekly closes, very high odds we're going to go and test those highs, and that's where the game begins. That's where it gets interesting. So going into this week, again, it's all about this level on the DAX. Are we going to manage to press through that level and continue, to set up possibly for strength into December, or are we going to see, maybe something more classical, a bit of a push in the last week of November, then a bit of a retracement in the first 2 weeks of December, and then the press? In any case, this is going to be a very interesting zone to do business. next week. Gold and silver, playing out pretty much. We had those reversals on those dailies we talked about. That very quick action in early in the overnight session. Well, early in EU session, where we took out stops aggressively to the downside. Bam, reversed, and then got that positive close on the daily and the move back into the 1200. So we remain at this 1200 being pivotal. The fact that we didn't get sold off hard, right? That this previous resistance did not act, sorry, this previous support did not act as resistance, and we didn't get aggressive selling here, probably means that the action around this 12,000 level is going to be very, very sloppy. And unless we can move back below these lows quick, the market might try and just need to press higher, and especially after the rate cut we got out of China, usually you would expect, the commodity currencies, in terms of Aussie, Kiwi to be bid. You'd expect USD CAD to be offered. You'd expect the gold and silver to catch a bit of a bid, and this will probably last for at least a week or so. So, still risk to the upside. So no big change in terms of this chart, and pretty much everything's replicated exactly on the silver. We got that aggressive move down, took out those stops, reversal on the daily here, and we're looking for this as long as it holds above the 1600 to try and make its way. Sorry, the 1600, the 16. I wish 1600 because I'm holding some longs. So above the 16s, and as long as it holds above there, we'd expect it to slowly try and make its way back into the 17, 18 range. So we'll have to see how that behaves, right? And speaking of those commodity currencies, we had this beautiful little move. We kept on going on about this on Twitter. It's all about the 114. It's all about the 114. It's all about the 114. It's all about this failure to hold above the 114 after we broke above, and bam. We were talking about basically for the past couple of weeks, we were looking for 1220s to come, and we finally got that yesterday. So thanks. We got that on Friday. So thanks, China. And basically here, it's a really interesting level, right? These 112.20s, basically they really hold the key for more downside or not. Now keep in mind that this doesn't necessarily have to move straight down in extensions. What would be healthy would be to see a little bounce here. And what's interesting in the bounce here is that the jury will still be out. If it bounces, is this the hold of this channel for a move back up, or is this going to be a healthy bounce for a move back into this other channel we were looking at for then the break back lower? So it's a really interesting level. So if we were talking about a pure technical market, what I would expect to see is some kind of a little bounce, giving the sellers a chance to sell back into that for the move lower if that's indeed what's playing out. But because we got that rate cut, etc., this might just move down in extensions. Now keep in mind that if you go back on the daily, you see why this 112 is so key, because it's holding the key to the break of this upside channel and a potential move all the way back into the 110 level. So it's really, really interesting. Also, if you look to the left here, you see this zone. We did a lot of business there in the past and has been a very key pivotal level. So right now it's catching a bit of a bid exactly where you'd expect it to do so. But following the news we got last week, you would expect to see some kind of follow through, maybe even in extensions. Okay, so it's definitely going to be very, very interesting to see how this plays out. And then we got Kiwi and Aussie. What's going on Kiwi? So Kiwi's being very, very sloppy, trying to hold some kind of a move back higher, but still getting offered about around those 79.30s, and we keep on talking about that level. And this really isn't going to change for the week, right? Unless we get back above there and we get daily closes above, this is likely going to continue to hold heavy. So into the week, what I'm focused on is this choppy range in the middle of a range. You've got the pivotal level inside, and we'll really have to see how this behaves. It could still be very, very choppy. Personally, I'd like to see it try to take another stab out to the upside and get some more Momo to the upside, at least back into the top end of the channel. But here it's a bit chalky, but keep in mind those 79.30s will probably provide a pretty good clue on what's going on, especially on a closing basis, and if we hold above or below. In terms of Aussie, also trying to hold some kind of a rotation. Now, you could probably make a very good bear case. You can make a pretty good bull case for a little bounce here. But clearly, it's choppy, right? You're getting pressure on here. It looks like it's trying to bounce up. It made a pretty good effort here at getting some traction to the upside. Then it got smashed down, and right here it's still holding these lows. So it's very, very choppy. I still think those 86.60s hold the key in terms of pivotal level from a daily close. To the upside, I'm looking at 87.70s. To the downside, I'm looking at those 85.40s, and it could still be very, very choppy before we resolve some kind of action here. So, we'll have to see how we trade going into the beginning of the month. A lot of questions on Euro GBP. Here in terms of the bigger picture, this is a monthly. We're still bearish on this, and we've been looking at this for a long time. These are all a bunch of measured move lowers. The target hasn't changed. We've had the same target for for years now. We've been looking for this to roll back into the 72 level. So this really hasn't changed. And on a structural level in the big term, as long as the UK raises rates before Europe, et cetera, this should still have legs. But clearly pressure is still on. What we saw here is some very interesting trading opportunities on a shorter term basis, and I posted the chart on the blog too, right? Where you see that we keep on having, in the past, a lot of failures around these 80-20s, break above, then bam, aggressive closes below, break above, bam, aggressive close below, break above, aggressive close below, giving you a lot of nice little chances to trade this to the downside. So again, I wasn't expecting this much velocity of the move back into the midpoint of the move from lows to highs, but this is a pure move. Very, very nice. Now, going into the week, this is the pivotal level. So again, look for the daily closes here. Again, I'm not a huge fan of engaging in the mid side of this range, so I think it's a lot more interesting to the upside and the downside. I think as far as the shorts are concerned, they do not want to see the upside tested again. They want to see this move straight down in extensions, take an aggressive move back lower. The longs want to see this hold and try and get back above these 79.40s very, very quickly. So look for this. I think there's not an awful lot of edge trading it inside this range. Your best bet is to look at action at the extremes, whether it's trying to play a hold inside the range, whether it's trying to play some kind of continuation outside of the range, even though not one of our favorite plays. But that's where I'd expect you to have a lot more edge. Looking at euro and cable, again, a lot of choppiness. By the way, keep in mind we've still got that that gold referendum coming out, that Swiss vote coming in at the X of the week. So again, if Euro CHF is going to try and take a stab at those 120s, it'll probably be this week or into the open next week. We'll have to see. Again, not something I would want to trade, not something I'm interested to trade, not anything I would recommend to trade, but it's definitely something I keep an eye out because it can cause some repercussions across different pairs, right? So it's just something I'm kind of looking at. So euro, what's happening on euro? Euro on a weekly close, we talked about it's all about these 125s, right? We need to get action around the 125s, and that's likely going to be the pivotal level. Daily, weekly closes above, below, pressure off if it's above the 125 for a move back into those 127s, pressure on as long as we close below the 125s for a move back into the 120-40s. Now, again, if you're looking in terms of seasonality or things like that, most people will probably look for this to continue to be a bit heavy maybe for the first part of this week, and then maybe bottom for a little retracement back up towards the end of the year. We'll have to wait and see. As far as I'm concerned, I'm focused on the levels here, and it's chopping around these 125, so we really have to see how the action breaks here. I'm not too concerned about moves at the extremes, but I mean, if you look at it also in terms of this tighter play, you see how it's just in this choppy range at lows, right? It's kind of like that Aussie, right? So it tried to get some momentum to the upside. It tried to hold a rotation to have a bit of a healthy move, and then bam, it got smacked down, but it's holding here. So that's the big question going into the week, at least on a smaller time frame. If you're looking at it even on this 1 hour, is it going to hold these lows or not? So especially going into the early part here, with this kind of action, you'd expect it to try and gap down a little bit at the open and cause some pain. But unless we trade below 123.50s quick, the healthy thing would be to see some kind of retracement to the upside, right? Whether that gets sold off or not, but it's similar like those other charts. All this shaded area is very whippy. Whatever happens inside this range doesn't really matter. You need to get hold outside to get more traction. Little liquidity, you get a lot of choppy action. Don't get confused by velocity of move inside range. That's what we like to say. And in terms of cable, also, cable, we talked about the fact that, oh, by the way, yeah, everybody's always asking me about it. Everybody's talking about this 200 on the monthly on euro. It's there. Is it going to break? Is it going to hold? It's anybody's guess. Personally, the way it looks when everybody starts to get bearish and then you get everybody calling euro at parity or all these kind of things, that's usually when it bottoms. Uh, so we'll have to see. In any case, if you're looking, if you believe in markets that revert to the mean, if you believe in healthy markets, et cetera, et cetera, et cetera, you'd expect that every day that passes here, we're getting closer to some kind of a healthy bounce on euro, right? The charts will tell, time will tell what's going to happen. Cable on the weekly again, as we said last week and whatnot, we said, as long as it's holding below inside 157.20s and 155.80. Do not be confused by velocity of move inside range. This could be very choppy. This could move very quick. And unless we get that weekly close outside, sorry, these levels, it doesn't mean anything, right? It doesn't mean anything. So it's just choppy. It's just looking for direction. It's just looking for a base, right? Or a chance to break down. So again, that's continuing, right? Sorry, I need to get a sip of tea before I choke here. So that's what's going on, right? So back above these 57.20s, expect it to try and make a good run to the 158, 159s. We get a weekly below those 155.80s, then I'd expect to be a lot of pressure on, okay? And it's similar to euro that if you go back on the smaller time frames, look how much chop you've got inside the range, right? It's trying to break to the upside, then it goes, and it hasn't gone anywhere, right? It's just looking for direction. But the only thing that is clear here is that it's unable to attract new buyers at highs to break outside of this chop range. And the other thing, it's unable to attract new sellers at lows, right? So as long as we're stuck inside this range, it's much to do about nothing. We need to get some flow, some momentum outside that. Is this a good week to get that? Maybe. We'll have to wait and see. But again, I think there's some interesting things lining up on the charts. Keep context in mind this week. It's really, really important, okay? So I hope you guys have had and are going to have an awesome rest of the weekend, wherever you are, whatever you may be doing. Thanks for listening. I'll see you guys around London Open on Twitter. Have a great one as usual. Thanks for your time. Take care. Bye-bye.